clearinghouse Xclear, where we pulled out the numbers today. We have processed 430,000 trades per day at the value of about 1.6 billion, a little bit north of $1.6 billion per day.
Digital Asset, we're the creators of DAML, which is a programming platform that helps organizations solve business problems where their existing data is siloed or inconsistent and incomplete. And today, our massive networks of loosely interconnected systems are just too slow and brittle to give users the live, accurate experiences that they demand. People push a button on their phone today. They expect things to happen now. And companies building solutions with DAML can cut across data and organizational boundaries, connecting physical systems at different stakeholders. So we can create arbitrary assets on the fly. We can create arbitrary pairs on the fly. We can create baskets versus pairs. We can trade these things. We can onboard investors. It's just much more of a composable, modern system that people are more accustomed to from their traditional B2C experiences that they have today. I can launch a complete solution in less than 15 minutes today, and you could be off and running. What's really important to think about is that what we've traditionally considered to be an exchange, I think, is changing dramatically. But there's a whole ecosystem of new types of applications and asset classes where price discovery just hasn't hit the market yet. When I think markets, I think price discovery. So for us, when we set out to build this, we wanted to think about what would it mean for there to be thousands or tens of thousands of exchanges in the world? How are those constraints different? How are the assets different? How do these things need to operate together? What are the experiences that they're solving for?
The creativity, the experimentation that we see right now is unprecedented. It's something that I have never seen the like of. It's this idea, this concept of what a market actually is. The market is really wide. For sure, we're talking to traditional type marketplaces where they are looking to trade sort of bond-like structures, equity-like structures, financial instruments comprising of funds, basically. So for me, I feel really privileged. It's so much fun to sit here and talk to all of these different entrepreneurs and all these really bright ideas that are popping up. And then being supported by this enormous platform that we have, where we actually can configure these things and demo and build an ecosystem in just a couple of days and start showcasing and start talking about it. It's just amazing.
We Baymarkets bring to the table is trust, that you can trust the marketplace to handle the counterparty risk, which I think is really important. Bring on liquidity, bring on both institutional investors and or larger volumes, can handle margining and collateral and settlement and everything without being a regulated entity, even though that even brings more trust. Even for cash products, you do need to handle risk, because if you start getting a lot of volume, you also need to do netting at the end of the day or during the day. So I would say that for the clearing piece, maybe not the products that can be instantly settled isn't the right thing. But I would say that any market that grows needs to have that. Traditional markets will always be there. And this is just a start where there's a movement from traditional T+2 settled markets to, I think, more instant markets where you don't need to have the long settlement cycles.
I think it's a really interesting question. I'll rephrase it a little bit to say that I think that we're seeing an interesting inflection away from more fundamental-based trading into more sentiment-based trading. These types of more sentiment-based investment and participation in the markets, I think, are going to push a whole new wave of new types of assets.
And I see smart contracts and the ability to build in so much more logic and so much more sort of checkpoints into the actual financial instrument. I see that as a normal technical evolution. So for me, the answer is yes. Everything will become digital assets. Maybe not in that kind of revolutionary way you imagine it, but in the future, when you trade a share, yes, it will be stored on a smart contract. Well, this is why it's so exciting to be us three right now. But my prediction is that every single stock exchange over the next 5 years, they will run a POC looking at a platform that is well enabled into manage digital assets in some capacity. They have a choice. They can do changes and adoptions into their existing tech stack, or they can run a parallel stream with a flexible, fast deployed and more cost-efficient solution like ours.
Clearing brings trust, and clearing handles counterparty risk. That's what it's all about.
I mean, they are, right? I mean, we get to work with some of the most innovative, but also largest institutions in the world, digital assets, working with the Australian Securities Exchange. These types of users are at the cutting edge. It's surprising to see, but it makes sense when you realize that 20, 30 years ago, these companies made cutting-edge decisions to dematerialize or build these new types of clearing and settlement systems that were cutting-edge at the time compared to the status quo.
Even when you have cash products, you do run into time risk. If you have netting either periodically during the day or at the end of the day, you have counterparty risk during that time.
You have a liquidity provider, a market maker, or anyone else of kind of that general activity in the market, then they never want to settle. They would go for T10,000. They'd love to be purely margined and to market on a daily basis. It would just allow them to provide a lot more liquidity at a lot more economical position. So the only problem with this entire conversation in my mind is not T instant, T1, T2, T5, T10. It is, how do you satisfy a diverse set of personas within the same order book? I really wish that we could have a more creative conversation about what it would mean to design a system under the new requirements that we understand today, as opposed to the purely wholesale B2B type markets that we designed for 20 or 30 years ago. You know, everyone thinks about stuff at a system level, but when you work with someone like a Baymarkets or someone like an Exberry, then we can get very granular and we could build much more dynamicism into the overall system than what you're thinking about today, where you build just kind of one set of standards that applies to everybody, similar to what I was describing before. We need to think about this in smaller pieces than just this is a T2 delayed settlement market.
Great question. It's easily 100. It might even be thousands. I mean, Eric is so eloquent around it. B2C and B2B markets are evolving and rapidly changing in that people are now maturing and expecting proper price discovery. They don't accept to just take price. It just means that the number of exchanges, the number of marketplaces that actually needs proper price discovery, and in the clear follow-on also need some kind of clearing, because many of these products will evolve into derivative style products. It will just explode. So yeah, maybe it is thousands.
We've been looking at the end-to-end digital asset platform. We're here with Baymarkets, Digital Asset and Exberry, who can deliver to you something really, really interesting. We're at Kanban for exchanges, just in days delivery. My goodness, Digital Asset, they can manage to start you settling something after you've downloaded the toolkit in less time than it took you to watch this highly elucidating international live stream. As we look to put our money to work, and ladies and gentlemen, if I may say so, why don't we think about putting our money to work in an exchange as well as just putting it to work on an exchange?